average home purchase requires you to put money down, a down payment. But coming up with those funds can be difficult for most people. In this video, I'm going to discuss the 3 best strategies for purchasing a home with no money down, and at the end of this video, I'm going to show you how to access the programs needed to execute on these strategies. And no, you don't have to be a veteran or purchase a home in a rural area to make this happen. The first strategy is to use a program like the Homebuyer Choice at Navy Federal Credit Union. Like a VA loan, there's no money down requirement, and you do not have to be military. This loan program features fixed interest rates with consistent monthly payments. This means that your payment will not change as far as the principal and interest is concerned for as long as you have that loan. Some really cool features, other than the fact that you don't have to put money down, is that you also do not have to pay PMI or mortgage insurance. Now, if you don't know what mortgage insurance is something that lenders require on conventional mortgages anytime you put less than 20% down on a property. However, with this program, you can put no money down and you still do not have to pay PMI or mortgage insurance. This saves you a ton of money on your monthly payment. Now, the program does require that you are a member of Navy Federal Credit Union, but it doesn't take much to do that. Open up a checking account with them, put a few bucks in there, and you're good to go. You become eligible to utilize the program. Now, a couple of things I would consider to be negative, as great as this program is, I don't only want to point out the positives, is that it does require you to pay a 1% origination fee, meaning that you'd pay a fee equal to 1% of the loan amount as part of your closing costs. However, they will waive this fee for you if you agree to take an interest rate 0.25% above the rate you qualify for. So you can avoid the cost, and you can just pay a little bit more as part of your monthly payment by taking a higher interest rate instead. Now, being someone that is looking for a 100% financing program, it's likely you're doing that because you don't have the funds to use toward the down payment and or closing costs. It's going to be more beneficial to you to take the higher interest rate rather than having to come to closing with those additional funds. You're also subject to a funding fee of 1.75% of your loan amount. However, rather than having to come out of pocket with this money the way you would for that 1% origination fee, they'll actually allow you to roll this into the mortgage. So rather than borrowing 100% of the purchase price, you would technically be borrowing 101.75% of the purchase price. And once again, just like with the origination fee, they give you the option to have this waived by taking a higher interest rate. So if you agree to take an interest rate 0.375% higher than the one you qualify for, they will waive that funding fee. Now, keep in mind, you can always refinance into another mortgage when the time comes and when you become eligible to do so because rates have dropped. Something that Navy Federal Credit Union will do for you that you really can't do with any other lender is if you used this choice program to purchase your property, they'll allow you to refinance one time when rates drop without having to go through the traditional refinance process. They'll actually only charge you $250 and they'll drop your rate for you and you'll continue paying on your mortgage at that now lower interest rate. So that's the first strategy that I would say you can use to buy a home with no money down, is to utilize a program like the Navy Federal Choice Program to purchase your property, because it has little to no barriers to entry other than joining the credit union to utilize that program. Now, another strategy is to utilize an FHA 100% financing program. So with an FHA 100% financing program, you'll have more options as far as the lender is concerned, right? You don't have to just go to the credit union, in this case, Navy Federal Credit Union, to get that bank-specific or credit union-specific program. FHA 100% financing is offered by many lenders, us being one of them. So first of all, you need to know why this is beneficial. So FHA mortgages typically require that you put down 3.5% of the purchase price of whatever property you're purchasing. So Example, $300,000 property. If you're putting down 3.5%, you would need to put down $10,500 of your own money to make that purchase. With these 100% FHA financing programs, the 3.5% is covered in the form of a second mortgage. You still get your 96.5% first mortgage like any other FHA loan. However, you're now going to have a second mortgage for the 3.5% down payment that you would traditionally have to come out of pocket for, giving you a total of 100% financing on the property. The way this works is the interest rate on your second mortgage, meaning that 3.5% amount that they're giving you to cover your down payment, is going to equal 2% more than whatever your first interest rate is. So if you received a 7% on your first FHA mortgage for 96.5% financing, the smaller 3.5% down payment portion of your mortgage would be at 9%, 2% above the interest rate on the first mortgage. And rather than being amortized or stretched out over 30 years, the payment on that 3.5% down payment second mortgage is over 10 years. However, because the amount is so small, the payment that comes along with it is also relatively small. This is a great solution for those of you who don't have the funds to cover that down payment and can afford a slightly higher payment because you're financing that down payment in the form of the second lien on this FHA mortgage. Now, in some cases, you can buy that down by paying discount points. Discount points are charges up front that you can pay to get a lower than market interest rate. But once again, if you're in need of a 100% financing program, meaning a no down payment requirement program, well, then you're unlikely to be the one paying extra money up front for a lower rate. You're more concerned with your out of pocket than your monthly payment. Right? So that's where programs like this come into play. And the final strategy, and the one I see most often, is to use a DPA program. So DPA stands for down payment assistance. And there's a multitude of programs that are available, whether it's through the state or through the county. They can be lender specific in some cases. An example of a down payment assistance program was the Florida Hometown Heroes program, which actually recently ran out of funds. We saw 3 different variations of this program dating back to the middle of 2022 and most recently in September, October of 2023. But the way that program worked is it would cover 5% of whatever your first mortgage amount was. So if you borrowed $400,000, the Hometown Heroes DPA program would actually have given you $20,000 to use toward your down payment and or closing costs. So if you were doing an FHA mortgage, which was allowed with this program, and you were putting down 3.5%, the program was giving you 5%, which actually exceeded the down payment, right? 5% is more than 3.5%, as we know, which meant that the additional 1.5% surplus went toward the closing costs on any buyers who are utilizing this program. So they only had to come up with a small portion of what was needed for the home purchase, thanks to this DPA program that covered not only the down payment, but also a portion of their closing costs. If you were to combine this with getting some sort of seller credit or seller concession, then you can potentially have gotten into a home, and we saw this happen, with zero money out of your own pocket. Now, when you're dealing with DPA programs, as compared to some of the other options that are available, and like we discussed, the other strategies to obtain a home with no money down, there are other requirements. So most of these programs, if not all, require you to have a minimum credit score. That varies. There are income limits based on household size and in some cases the area median income for wherever you're looking to purchase a property. Some of these programs have occupancy requirements, meaning that you need to occupy the property as a primary residence. The early on version of Hometown Heroes actually had an occupation requirement, meaning you had to work in specific occupations to even qualify for the program. If you want to learn more about DPA programs specifically, check out my video about down payment assistance programs. I've included a link in the description of this video so that you can actually go and search DPA programs on your own using an easy to find tool on the Freddie Mac website. And if you want to learn more about the Navy Federal Credit Union Homebuyer Choice Program, I've included a link to that program in the description as well. If you're looking to purchase a home and saving up for a down payment has been holding you back, I hope these strategies I shared will allow you to take the next step toward homeownership. If you have any questions about your specific scenario, feel free to leave a comment below and I'll reply to you personally. And if you like the information in this video and want to continue educating yourself on the home buying and mortgage process, make sure to follow me for more videos just like this one.